folks, Dan Frio here with your opening bell for August 5th, 2025. So mortgage rates, they dropped yesterday and we're now in the 6.5% range where I expected in Q3 of this year. So is it going to continue? That's what we want to really focus in on today, because if you're watching this video, most likely you're looking to buy or refinance. Hopefully I can help you out, because I'm actually a federally licensed mortgage loan officer, licensed in all 50 states. And my slogan here is one application, one credit pool. We're going to compare your loan to over 30 different lenders. How do we do that? I'll give you all that at the end of this video. You're here for these things. So let's get over to it. So here's what we're seeing in today's market. We have the stock market. It is up again today, all the way across the board. We got the indices up. The VIX is down to 17. I'll give that a thumbs up because we're down in the teens. That's helping there. But the thing right now that we're focusing in on is right through here. The more tariffs by the President Trump. So we're going to talk about that. We're also going to talk about earnings reports. We're going to talk about a whole slew of other things in today's report. So without further ado, folks, let's get over to it. So we're going to see today is right through here. Here's the economic calendar that we just got. And here's what I was waiting for, folks. We went down through here on Tuesday, and the thing I was waiting for is right through here, the servicing indexes. And we got right here, we got the first one that came in, S&P Global PMI. It was 52, came in at 55. That's a thumbs up. We have servicing PMI at 52. It came in at 55. I'll give that a double thumbs up. A little confused on what these are. Don't worry about it. This is helping the markets, saying the economy is okay, because we saw the VIX kind of in the teens. That means the markets aren't really concerned at this point. So let's get over some of the things that we want to talk about right now. The bond market is down 12 ticks. What I was waiting for was some data on the PMI sector, but we did have a nice little rally yesterday that helped rates right through here. But I want to give you guys a little bit of a context. I'm going to go over to this piece right here, and I know it's a little bit out of context, but I want to show you, this is a member of Canada, and when they first come out, they're really contentious about, okay, Donald Trump did this and Donald Trump did this, but then as our moderators kind of ask them questions, the tune changes a little bit. If you don't realize it, let me know your thoughts on this thing. This is the Canada tariff deal that's going on right now with the president in Canada. I just want your take on this because this is the headlines for today. When we come back, I'm going to show you kind of more reactions to the stock market, more reactions to other things, because we're going to go over the economic calendar. We're going to go over news events, and we're going to go over right through here, the earnings calendar, because we want to see how corporate earnings are faring with all these tariffs that we're hitting right now. So without further ado, let's get over to this. When we come back, I'm going to show you how markets are reacting to this. Then we're going to dive into my short-term, my mid-term, and maybe my long-term expectations where rates are going from here. But I want you to see this. Well, let me know what your thoughts are down below.
President Trump and Canadian Prime Minister Mark Carney are expected to hold talks in the coming days focused on tariffs. That's according to a Canadian trade official, and it follows the president hitting Canadian goods with a 35% tariff. Joining us right now is Colin Robertson, a fellow at the Canadian Global Affairs Institute. He's also a former Canadian diplomat.
Okay, I hate to say this. Anybody ever watch Trailer Park Boys? Does he look like Bubbles? Has he aged? Just saying, folks, just saying.
And Colin, how do you think we got to this position?
Well, we got to this position because Donald Trump wants to impose major tariffs on Canada in violation of the Canada-US-Mexico agreement, or what you call the United States-Mexico-Canada agreement, which Donald Trump once proclaimed as the best deal ever negotiated because he was a negotiator.
We are now looking at tariffs around the world.
So how do you go off of this? And the commentators did fantastic. Watch when one of them asks them a question on why is Canada so bad when it comes to the economy throughout the world? And then the tune changes a little bit. So let's go back to it.
It's not just Canada that's being targeted with this, but the president clearly thinks that Americans are getting a raw deal on the trade agreements that have been laid out over decades on this. I think he would like to renegotiate some of the trade deals that are already existing. Where do you think things stand? Is there an imbalance between what the United States gets and what the Canadians get?
Canada has a slight advantage, largely because of our energy exports, which the United States then turns around and sells abroad. Without Canadian energy exports, the United States would not be energy independent. So this is part of the disappointment on the Canadian side. Our trade is virtually in balance. On the services side, you have a significant advantage, and the trade has been worked extremely well since our very first, it's been 60 years, as our Prime Minister says, his lifetime, since the first trade agreement we signed, the Auto Pact back in 1965. Again, that works extremely well, integrating the automobile industry between Canada and the United States. And then in 1988, we signed the Canada-US Free Trade Agreement. Then came the NAFTA, and then we renegotiated, when Mr. Trump was last president, what he calls the United States-Mexico-Canada Agreement.
I don't know, Colin, Canada's kind of in a tough spot. I think you've seen the numbers of the past 10 years and per capita economic growth. I mean, it's staggering when I saw it. You're dead last in these countries. It starts with the U.S. It's up, I think, 20.1% GDP growth per capita over the past 10 years. And Denmark, Spain, Netherlands, Italy, Sweden, Japan, France, Australia, UK, Norway, Finland, Germany. Rounding out of Canada, up 0.5%. Your citizens have lagged almost the rest of the developed world in prosperity and per capita growth. Why is that?
Partly lack of attention by the national government to the economy and a lack of investment. That's one thing that the new Prime Minister, Mark Carney, who was head of our central bank and then later head of the British Central Bank, has decided that we're going to put major effort to build across Canada and then diversify our trade, and also to reduce interprovincial trade barriers, what we call the unfinished business of confederation, dating back to 1867. That's actually begun. Our governor's equivalents, what we call premiers, have all agreed that we now need to do more to put emphasis on the economy to address exactly what you described, that lack of economic growth over the past decade, where we did fall way behind. We had been keeping pace with the United States roughly until then, but we slipped significantly, and that's on us.
The trade minister from Canada was on the airwaves this weekend saying that he thinks there's a lot of common ground between the two countries and that a deal will be reached. Do you know where you expect to see the contours of that deal, how you expect to see that play out?
Well, I think what they're working from is the agreement that President Trump negotiated 4 years ago and making incremental changes. There were to be a review of the agreement was to take place next year. In fact, preparations were already underway when President Trump came to office. So I think that what we should wind up with is likely to be something like what we've already got, with some adjustments. The Americans would like us to remove the digital services tax. The Prime Minister's agreed to do that. Supply management, something that we both practice. There may be some.
So he started out completely complaining about everything, but then he comes back saying, well, we'll probably just be back to where we are right now. So what's the deal? So why do you make such a big to-do of it? Well, that's what we want to focus in on, because you can't always judge a book by its cover. He's basically saying he's coming out with all this contentious information, but then coming back saying, well, we'll just probably be exactly where we are right now. So what's the big deal? So I just want you guys to see how the data in the media kind of skews a lot of the data. But when it comes all said and done, it's basically like, well, we'll probably be right where we are right now. So, okay. I just want you guys to understand that piece of the puzzle. So now let's get over to see what the markets are doing right now. First off, we want to go over to the earnings reports to see what we have for today. We have right through here, not a lot of earnings just posted yet out of, what do we got here? 1, 2, 3, 4, 5, 6, 7, 8, 9. So we got 18 earnings reports out. We have one that came in lower than expected. We got 1, 2, 3, 4, 5, 6, 7 better than expected on earnings reports, and we're still waiting for a whole slew of people to give us their earnings reports today. So here's what the earnings reports look like this week. Why are we focusing in on this? Well, this is where the tariffs are supposed to really take a chunk out of these corporate profits, and if they do, if you start seeing a red all over across the board here, that means corporate profits are tumbling. That means what would happen? Well, they're going to have to lay off people because people aren't buying as much stuff. Then you start laying off people. You don't have to produce as much stuff. You have an unemployment rate go up, and then you have a deterioration of the economy. That's what we're hoping that doesn't happen. And that's what we're focusing in on, especially with earnings reports coming out. I just watched an earnings report, the call on CAT. I thought that was going to do pretty good, but they're getting hammered by the tariffs. And that was one of the stocks that we looked at one point, because this was part of the infrastructure bill that we were looking at. You know, what do we add in our stock portfolio? Because I do Stock Talk Tuesday. If you want to check that out, we will be be live today doing that. But that was one of our picks on how the economy is going to grow. This cat was a good pick, but I didn't like it because of the tariff barriers between this. But here's what we're seeing that today. There's all these companies are coming out with their earnings the rest of the week, so we'll be reporting that. Let's get over and see how the news that just popped out on the servicing numbers. We were waiting for these to come out. So here's the data we have for today on the economic calendar. We have Trump speaking. Looks like he already spoke this morning. We have a trade balance. It's actually getting a little bit better. It's only negative $60 billion. But here's what I was waiting for right now. The servicing PMI and the S&P Global Composite PMI. They both were higher than the previous reading. So that's a thumbs up when you're looking at the market. So let's get over to the bond market. Bond market's coming back a little bit. It was down 12 ticks just a little bit earlier. Here's what we're seeing on the MBS market. So if you're new to the channel, what we follow here on the market on the channel is right through here. This is what's happening to the mortgage bond. Well, this is basically what creates your rate or your mortgage rate when it comes to mortgages. So here's the last 2 days. What you have to understand is as the market goes up, that's good news. That means mortgage rates are coming down. Prices of bonds go up, yields come down. Okay, what we saw today is there's a gap. There's an opening gap here. What normally happens when you see a gap like this, it fills. We're hoping it fills today because that means it will rally back up to 100.25. So we want the markets right there here. We want this number to be above 100. That means mortgage rates are coming down lower and lower and lower. So right now we just hit the 6.5 tier like I've been expecting over the last year, but with these tariffs, it kind of threw that through a curveball. So that's what we're seeing right through across the board there. We went through the earnings report. We went through the financial calculator. We went through the economic calendar. Let's see what the markets are doing right now. Well, let's finish it with this. The Dow Jones, the S&P, the NASDAQ, and the Russell are all up. Not much, but we'll take green across the board. The bad thing here is the VIX is up a little bit. We like the VIX. This is the anxiety level on Wall Street. We like this to be about 13, 14, 15. When it gets closer to 20, it just went flat. So that means the markets are stabilizing right now. There's really no news today other than that Canada thing I just wanted to show you, because other than that, there's really nothing out there right through here. We saw the Caterpillar earnings. I was watching that earnings call, and I won't say it's impressive, but the tariffs are taking a chunk out of that in the short term. So that's what's happening across the board through there. So last call on this, MBSs are down 10 ticks. That means mortgage rates will tick up just a little bit. We might be at 6.5859. I don't even think we might hit the 6.6 rate back today. So rates are at 6.5%. Will they stay? Well, that's what we're hoping, and that's what we're going to focus in on the rest of this week. I'll give you the data that's coming in each day that will be affecting these things, and specifically I'll be advising you guys on the whys behind it. So folks, my name is Dan Frio. I do this report twice a day to inform you guys what the heck's going on with those things and the whys behind it. And the reason why I do this is I'm actually a federally licensed mortgage loan officer. I'm licensed in all 50 states as well as Puerto Rico. So put my 35 years of experience to work for you if you're looking to buy or refinance. Also, we have a slogan here, and here's the unique part. One application, one credit pool. We're going to compare your loan and your rate with up to 33 different lenders. Now, how do we do that? Well, it's kind of neat. My bank that I work at, it's a federal bank. We're set up with 33 other lenders. Why? That's to help you guys. We know when you're out there looking to shop for rates, you're going to get 2, 3, maybe 4 quotes. It's time consuming and it's a really pain. So how can we solve that for you? So we did this. We created this system right through here. You can apply with one application. We're going to pull your credit one time, and then we're going to shop with over 33 different lenders on who has the best rates, fees, or who's got both of them. Most times what will happen is people will send on me their loan estimate review with over those 30 different lenders. You could do that right through here with your loan estimate review tab. Click that, upload the best loan estimate review you have, or LE, loan estimate. I'm going to actually do a personalized video right back to you to show you how much we can save you in fees, rates, maybe all the above, what happens in most cases. If we can't help you, I'll be the first one to give you a thumbs up saying, God bless you. You did your homework and you did a fantastic job. So check out that service that we have for you. And also, if you're looking to buy that home, it doesn't matter if it's your first home or you're moving up or whatever, see if you qualify for up to $7,000 in down payment assistance with this program that we have right through here. So thanks for watching this morning, folks. I hope you find a little enjoyment in that Bubbles report to us. And I will be back live today with Stock Talk Tuesday. And then we will be live as well with the closing bell on how all this ends for the day. So thanks for watching, folks. And we'd love to help you out if you're looking to buy or refinance. Check out the rateupdate.com. If you haven't subscribed yet, please do so right down there. I'm trying to hit 40,000 subscribers as soon as we can. And that's up to you guys to help me get there. Thanks for watching. Bye-bye.